Hey, what's up, everyone? My name is Ale. Welcome back to my world of stocks. Sorry for disappearing there for a little bit. I've been dealing with some stuff outside of YouTube. I moved into my new house and there was a lot of work that had to be done. I finally finished everything. Going forward, I think I'll be uploading at least once every other day. I know I'm not the best at keeping those promises, but I'm just going to try to prove it rather than talk about it. So let's just continue on with the channel. And what better way to kind of get back into the groove of things here on YouTube than with my favorite monthly update series where we cover three specific topics. Number one, we talk about the current state of the economy and the stock market on a more macro level, and I share my opinion on everything going on. Number two, we talk about what stocks I bought or sold last month, which was June 2021. And then finally, number three, we cover what stocks I'm thinking about buying or selling this month here in July of this year. It's a lot of fun. I really enjoy this series. I hope you guys do too. Make sure you hit the like button if you do. Let's go ahead and start with topic number one, current state of the economy and the stock market. And as of right now, we continue to trade at very high levels in the market. And there's a lot of growing fear about a possible crash coming soon, especially if new lockdowns were to be announced because of a new variant of the pepperoni that does seem to be a bit worse than the original. I'm going to share my thoughts on all of that. Now, as it stands, the market continues to trade at extreme highs in what I feel is this sort of new age of economics where hedge funds and financial institutions just don't really seem to care about fundamentals or the underlying economy, but instead they just kind of keep pumping everything up and inflating the markets. Currently, the Dow Jones Industrial is up over 90% in just the past 5 years, currently trades at about an all-time high. The rich S&P 500 is up over 106% and also is trading at an all-time high as well. And finally, the tech-heavy Nasdaq is up an unbelievable amount of over 200%, right at an all-time high as well, thanks to all of the big tech corporations that benefited from people staying home. What's crazy though is that the economy is still in bad shape, and as a result of the market being up so high regardless, the Shiller P/E ratio that sort of tells us whether prices for stocks are cheap or if they're too expensive, it continues to stay at very high levels of that extreme bubble range, which we've actually been in for several years now, but as of right now, we're currently higher than right before the Great Recession crash, and we're even quickly approaching the dot-com bubble level, which was also, of course, incredibly disastrous, leading to a big crash in the market. Now, last year's crash did get us down to the regular bubble range, and right there I actually think was fine because prices were super cheap and I bought very heavily myself, but the problem is that we skyrocketed too quickly and too sharply off of that, leaving us now badly needing a healthy correction. As far as what's going on, ever since the late 90s, we've only ever really been trading in that bubble and extreme bubble range because hedge funds and even international investors like China just keep buying everything up and pumping up American assets without really caring about valuations. If you turn to this chart here that shows ownership of US corporate stock, you can see a huge correlation with international ownership just skyrocketing over the past few decades in that kind of orange color there. Now, meanwhile, you have politicians and hedge funds trying to convince millennials not to own any property, yet they go around buying up everything at huge premiums, like BlackRock, for example, outbidding normal home buyers by 20 to 50% according to the Wall Street Journal. And that's what you end up with here, everything basically being inflated. Thing is though, that makes it harder for the markets to crash because everyone keeps wanting to park their money into American assets and they just keep buying everything up. So in my opinion, what I think would actually have a better chance of crashing the market would be a new round of lockdowns, since we already know for sure that they can crash everything just like they did last year. And it just so happens that new lockdowns could actually be coming thanks to a new variant of the pepperoni that looks to be a bit worse than the original. In fact, places in Europe have already extended certain restrictions, and even some in Asia have put lockdowns back into place. Still, I personally don't think that America will be going back to lockdowns for one specific reason, and that's V-shots. They've been ramping up like crazy lately, with almost 50% of the US population already being V-nated. I don't know, I'm trying to think of like a pun or like a different word to say because of YouTube, you know how YouTube is. But anyway, and that's just all ages, by the way. But when you look at the more vulnerable ages of 18 and over, and even more so the 65 65 and over age group, those have close to 70% and 90% respectively having already received at least one dose. And to be fair, there are some concerns about how effective the V shots even are for the new variant, but hey, many scientists and health experts, including this one from the University of California, San Francisco, are coming out now saying that V shots do in fact work against the new variant. According to Bloomberg, she states that even those with the shot who still get the new variant only have mild symptoms and generally do not need to worry about this new variant, since the AstraZeneca shot has a 92% efficacy rate against the new variant, while the Pfizer shot performed even better. So while I get that there's always going to be people that are going to be a little bit more negative on the global health issue topic and are going to want lockdowns because maybe they're afraid of things, and I understand all of those concerns, but personally, it's just my opinion. I really don't think America is going to be reversing course here in terms of easing restrictions, and I really don't think that lockdowns, at least in any kind of major way, are going to be coming back. When I look at the facts, I see a lot of people taking their shots. It seems to be a pretty effective thing. I just think that we've got this thing pretty much under control at this point. I could be wrong. It's just my opinion. It's my gut feeling, but I really don't think lockdowns are coming back, and I don't think that's going to cause a crash in the market anytime soon. Because in the meantime, I think that hedge funds, financial institutions, and like I said, also other countries around the world are just going to keep pumping up American assets. Seems to be the place where they want to park their money, and I think they're just going to keep inflating everything. Now, longer term, I do absolutely think a crash can happen, but I think it's probably more likely to come from inflation and inflationary reasons that would take a little bit of time to kind of add up and scale up. So shorter term, looking out to the next like 12 months, so looking out a year from now, within the next year, I think what's more likely is that we get a decent sized correction. I'm thinking around 10 to 20%, just because the market is so high already. So I could see some hedge funds wanting to kind of cash in some profits. And even if just a few of them start to do that, I think others would be very willing to do the same and kind of copy them. And I think it'll kind of snowball just because the market is so high. So I think a lot of people are kind of trigger happy right now. I think if anything sets off a sell-off in the market, I think it'll snowball into a decent sized correction. So I'm thinking 10 to 20% seems more likely over the next 12 months at some point, whereas a bigger market crash probably needs a bigger catalyst, in my opinion, until inflation really starts to take a hold of our economy, which may or may not happen. But in the meantime, I think a bigger catalyst is needed, like a new round of lockdowns or maybe some kind of big trade dispute. Something bigger, I think, would be required for a market crash. In the meantime, though, market is way too high, in my opinion. I think we do need a healthy correction at some point. So the strategy still kind of remains the same, at least for me. Continue to buy stocks, but do it very strategically, a little more cautiously. Pick and choose where I'm putting my money, but also be saving at the same time, adding to my cash portion of my portfolio so that when a correction does come, I can go in a lot heavier. And if a crash comes, I can go in also much heavier at that point too, because I'm the type of investor that likes to buy when stocks are going down. So right now I do have to be a little more cautious, more strategic, but I'm also the type of investor that is always thinking long term. So I'm pretty much always buying stocks, and that's just really been the case for me, as you guys know, throughout this whole channel. Which brings us to topic number 2. What stocks did I buy or sell last month in June of this year? And I did not do any selling. I only did purchases, and they were fairly strategic. For example, I bought 2 brand new stocks, and that's despite the fact that I already bought 2 brand new stocks the month prior as well. So that's 4 brand new stocks in the span of just a couple months. So you can see that I'm kind of digging and looking for opportunities where I can find them, looking for new opportunities as well. Those were a little more opportunistic, more kind of speculative though. I did try to balance it out a little last month by adding in a third stock, which was a stock that I already owned, but it was a more reliable dividend stock. So let's cover these 3 stocks really quick. 2 brand new, kind of more opportunistic, strategic, maybe even speculative stocks. And then there was one safer long-term dividend play as well. Now, starting with the 2 brand new ones, the first one is Spotify, ticker symbol SPOT, and this one is definitely more speculative for me, so I went in very light. I bought it at around $232 a share, which I'm happy with myself. It's already climbed about 13% since then. Now, since their IPO in 2018, the stock has climbed by over 65%, but if you focus on a more recent activity, they're actually well below the midpoint of their 52-week range, and they're currently down over 16% this year and more than 30% from their high of $387 a share. So even now, it's probably still a decent price, but I probably won't be buying more myself just because I got it a bit lower, and they are again pretty speculative and higher risk as they are not currently profitable on a net income basis. They do, however, post positive operating cash flow of hundreds of millions of euros consistently and have very nice revenue growth rates of around 20% or more. So when the price was falling hard, I just thought, that was probably a good entry point for a company that I do feel is heading in the right direction, so I went ahead and bought some. The problem is, though, that they have to invest very heavily on content licensing, like the $100 million deal for Joe Rogan's podcast, but I'm really a big fan of that move, among others, just because it does help them stay on top with the most music streaming market share, as well as becoming the second most used podcast app in America. So I do think that they're making the right moves, but I just wish the stock was cheaper because their price to sales ratio right now is above 5, which is even higher than Amazon. So you could argue that it's kind of, sort of more expensive than Amazon, which is kind of crazy. So I'm kind of forced to be extremely cautious with this one and only buy in small amounts when I see the stock falling hard because of those reasons. Now, moving on to stock number 2, though, this one is still a bit speculative, but I love it way more, and I actually want to make it into a big position in my portfolio over time, and that's Palantir Technologies, ticker symbol I think it's PLTR. I forgot to write it down. But anyway, this is a little bit of a controversial stock just because it's a big data analytics company that does contract a lot of their work for the US government on things like spying and counterterrorism, but that'll likely vary based on your own personal political and ethical beliefs. I'm just throwing it out there. Sometimes it can be kind of noted as being a little bit of a controversial stock. Just purely as a company, though, from a business perspective, which is what I try to focus on more myself, I think they have a very bright future. They've already been awarded numerous million-dollar contracts with the government, like a $91 million contract for artificial intelligence and machine learning development for the Army, $44 million partnership with the FDA, $7 million with the CDC, $90 million with the Nuclear Security Administration, and over $100 million for the U.S. Special Operations Command, not to mention contracts with corporations as well, like 3M to help them with their supply chain, and BP to help them with their sustainability projects, just to name a few. All of which is leading to explosive growth for them, usually around 30% or even more per year, and only having done about $1 billion in sales last year, but still having an addressable market of almost $120 billion. So the sky is really the limit with this one. I bought the stock right around $24 a share, which is where they currently still trade around, so I'm almost certainly going to keep buying the stock here. Of course, I'd love for it to drop down to the teens, but that's probably asking for too much since it's already down about 45% from their high earlier this year of $45 a share. Still, I should be careful with this one though, just because like Spotify, they are currently not profitable, although they did generate positive free cash flow over the past year. But I think longer term, their services can become very profitable. And that's really what I'm thinking about with this one. It's the super long term where artificial intelligence and deep learning and analytics, all of that stuff becomes insanely important and everything in the world just kind of starts to revolve around it. That's the vision that I really have. So like I said before though, those two stocks that I just previously mentioned, Spotify and Palantir, they're a little bit more on the speculative side. So I did try to balance it out last month with this last stock being a much safer dividend play. And this is one that I actually already own, but I went ahead and purchased a few more shares of, and that's the giant pharmaceutical company known as Merck. Ticker symbol I think is MRK. Now, they generate almost $50 billion in sales, and they're consistently profitable by billions of dollars as well, thanks to their best-selling drug Keytruda and a robust pipeline to diversify the business. Now, they're not a high-growth company, but they do make up for that with a nice dividend of over 3.3%, a low payout ratio below 50%, and 11 years of consecutive growth. I bought my shares at right around $74, which I do think is pretty good because the stock did climb by over 5% since then. I like my position. There's a slight chance that I buy more in July, but I think for right now, I'll probably just stick with what I got. It's not a super exciting company, so I don't usually track it very closely, but every now and then I do like to add to my dividend positions, and this is one that I feel pretty good about. And by the way, I will just mention, looking at the price targets for this one, it's actually still significantly lower than the average of 93, which would be an increase of almost 20% just to get to the average analyst price target. So I don't know, maybe you can take that how you will. Anyway, that does it for last month. What about this month here in July? What am I thinking about buying or selling this month? Well, to be honest, there's not really anything in my portfolio that I feel I need to get rid of at this time, so I'm not really anticipating any selling, although that could always change as we progress through the month. But in terms of what stocks are on my radar for purchases, well, for sure, Palantir is definitely way up there. I think that's the stock that I'm just the most excited about in general. It's the one that I don't know. I don't know what would be like a dumb analogy, but maybe the one that I've got like the most butterflies for in my stomach, the one that I'm just kind of really interested in right now. I'm looking to purchase a lot more of. So Palantir is definitely going to be a stock I can almost guarantee you that I'm going to be buying throughout July. But there's also a couple other stocks. I want to say two more stocks that are heavily on my radar right now. And one of them I just think is a screaming buy right now. I just think it's at an amazing price. So I really want to pick it up. The other one, however, is trading at an all-time high, and I think it's really high. I really want to buy more of it, but it is too high. So I'd have to wait for a dip. So some similarities in that those two stocks are stocks that I own already that I want to add more of, but some differences in that one of them I think is a screaming buy right now, and the other one I think is one that I would have to wait for a dip on. So Palantir and then these two other stocks. Let's cover those last two stocks, and then we'll wrap up the video and finish it up. And the first one, like I said before, I feel that this one is a screaming buy right now. It continues to be Alibaba, ticker symbol BABA. And I know I've talked about them a lot this year, but this is a stock that continues to trade at an unbelievably low price for how good of a business they have. Over the past year, the stock has crumbled by over 30% from their highs, leaving them right near the bottom of their 52-week range. Biggest reason for that was because of regulatory pressure from the Chinese Communist Party that has basically expanded their antitrust laws to more closely monitor and regulate giant tech companies like Alibaba. So, for example, they halted their spin-off Ant Group IPO. They fined them a record amount of money for unapproved acquisitions. They launched an antitrust probe into their e-commerce business. There's even talks of them preventing exclusive deals with merchants that are used to lower prices in order to attract customers, which makes it harder for smaller companies to compete with Alibaba. I mean, the list goes on. But truth be told, we could talk about this for hours. I mean, this is a topic that gets heavily debated, and we could obviously, debate about how much all of this will impact Alibaba over the long term. But in my honest opinion, just to kind of keep things short so that this video isn't overly long, I just want to say that I think China really needs their companies to succeed in order to compete on a global scale. And I think over time, the government will probably just get more involved in Alibaba's affairs, which may hurt their growth a little, but I don't really think that it's going to change the long-term story that much for Alibaba. And I really seem to not be the only one that thinks that this is a buying opportunity, because even Warren Buffett's right-hand man, Charlie Munger, he's been pouring millions of dollars into this stock as well. Now, the reason is obvious because Alibaba is a giant behemoth and they continue to put up growth numbers like a much smaller company, which is very hard to find in the market. Last year, they did over $100 billion in sales, and that's in, I believe that's in US dollars, by the way, and yet they're still expected to grow by over 30% this year. That's insane growth for those type of numbers. I mean, I get the concerns, and I've always had concerns for Chinese stocks in general. We've talked about that a lot on the channel. But this is a stock that I'm adding to when it's down because I just kind of feel like it's a no-brainer, assuming that, nothing kind of really drastic happens with Chinese stocks just kind of overall. Now, the other stock that I want to buy, though, is a little bit different than Alibaba in that it's not only an American company, but it's also a stock that is trading very differently because it's basically at an all-time high. So I do really need this one to dip first before I can buy more of it. And that's going to be the iPhone maker Apple, ticker symbol AAPL. And it may not be that crazy to expect a dip, though, because, again, it's trading so incredibly high that even if there's just like a small market pullback, I do think Apple would be one of the stocks that would get hit a little bit harder than most. But I think that would be a great buying opportunity because for example, there's a lot of reasons, but just kind of short term. I mean, the new iPhone and Apple Watch are probably right around the corner. I think they'll be announced. Usually get announced like late September. By the way, I'm actually thinking about switching from Android to Apple for the first time in my life, just because there's two reasons actually. The iPhone 12 I think looks gorgeous, and so the iPhone 13 I'm sure will look very similarly, and I really like how it looks. I know that's just kind of superficial, but the other reason is because I really want a good smartwatch, and Android just has like no good smartwatches. So I guess there's some, like I think the Galaxy Watch is supposed to be pretty good, but Apple I think just does it really good with their Apple Watch. So I really want one, and I figure if I'm gonna buy an Apple Watch, I might as well get an iPhone. Well, obviously Apple Watch doesn't even really work well with Android, so I'd have to buy an iPhone. And that's how they get you. That's how Apple gets you. You buy one thing and then you have to buy everything. But anyway, I'm probably going to be switching to Apple with these new versions that come out probably late September. I think I'm just gonna go all out, get like the iPhone 13, probably Pro or whatever, and then get like the Apple Watch with cellular on it. So I'm just gonna have everything going all out. But anyway, I just rambled on for a bit. Now, I realize that those would just be kind of short term catalysts, so it's not really thinking long term there, but it would probably give the stock a quick and sharp recovery from a dip if you're having a new iPhone and a new Apple Watch come out, right after that. Longer term, though, the story is just always the same with Apple. Their 5G phones so far have been a huge success, and it's leading to Apple already being the market leader in 5G despite showing up late to the party. And what I love most about them is that they just get you into the ecosystem with one thing. Like I said before, I mean, they get you in with an iPhone and then they start selling you all these accessories like the watch and the AirPods and then all the services and apps through the App Store. All of it leads to a very loyal fan base that helps them produce gigantic amounts of money. This year, they're expected to generate over $350 billion in sales. And what is even more shocking is that over the past year, they did pretty close to $100 billion in just free cash flow alone. I mean, show me other companies that are putting up those kind of profits. That's insane. So when you look at the fact that Apple generates these insane amounts of money and how throughout history they've always just kind of introduced a new product or service to add on to growth for the company, they introduce something to add to their ecosystem because their user base is just so dependent on Apple products and services. They usually just eat it right up, right? So they come out with a watch, they come out with the AirPods, they come out with whatever, a tablet, the iPad, whatever it is, or maybe some kind of service, or maybe Apple TV, whatever it is. Usually their customers are willing to jump on board just because they already have everything Apple. And I know this is kind of speculative, but there are some things that we know about, right? There's the Apple Car, and I really think, look, the Apple Car, it could be a major flop. It might not even happen, but if it does, I actually don't think the Apple Car would be that hard for them to turn into a success. Just like I think there's really anything that they could do that they could turn into a success just because they have that loyal, dependent fan base. If you're already using all of your Apple products and services, why not also have an Apple Car? I don't think there's a lot of people that are super loyal to car brands to where they're not going to be willing to switch to something from Apple, except for maybe Tesla owners. Those seem to be pretty loyal to Tesla, or there seem to be a more hardcore fan base. But if you own a Ford or Toyota like me, or a Honda or whatever else, I don't see why you wouldn't be willing to also have an Apple Car, assuming you can afford it, of course, which I think the Apple Car will probably be very expensive. But anyway, I'm rambling on here. The point is that they could come out with anything, glasses, they could come out with a bike, they could come out with more household appliances for the smart home, whatever it is. Apple has the money to do it. And again, I know that we're speculating here, but if you're gonna speculate, why not speculate on a company that just did about $100 billion in profits in just a single year? I mean, that's a company you want to speculate and kind of gamble on because the risk is not going to be very high. They can take all kinds of chances and fail. Doesn't even really matter to them. So when I look at Apple stock, I think there's big things coming for them, for the company. They've got the money to make some big moves, and I just think they're going to catch people off guard. And by the way, I wouldn't even be surprised if Apple was to jump into the social media game and start competing with Facebook. Maybe they launch their own version, or maybe some kind of Instagram clone or whatever else. If you're already using iPhones and they launch some kind of social media platform that is heavily integrated with your iPhone and with all the things you already use, and it's streamlined and it's super easy to use, I could totally imagine all of their users wanting to jump into that as well. And that could just skyrocket, and then they'd be generating huge amounts of money from advertising, which is very high margin as well. So there's so many things Apple could do. Again, Not saying they will, not saying they'll be successful at all of them, but they could try a number of different things and most of them could fail. But if even just a couple, succeed, it's going to benefit them and they can afford to take the risks. So when I just look at Apple, it's the type of stock that I'm willing to gamble on because of the company, because of their profitability and all of that. I just think the stock is way too high right now. I really want them to dip. So if they dip, I'm going to just jump straight into it and just pick up some more shares because I already do own Apple stock, but it's very small. So I do want to turn it into a larger position. We'll see what happens here in July. I'm hoping for some dips, but I have a feeling that the market is going to have to correct back down before I'm going to be able to get Apple stock at a cheaper price. So maybe I have to wait for that correction to come in the market, but we'll see. Hopefully I get a dip on Apple. Anyway, those are the stocks for these last couple months and what I'm looking at here in July. Let me know what you guys are doing out there in the market as well. Are there any stocks that you're interested in buying or that you've been buying? Let me know your thoughts down below. Let me know how you feel about any of the stocks I mentioned here as well. I'd love to read those and respond to them. Thank you again for all the support, guys. I promise more videos are coming. Just going to have to believe me on this one, but big things are coming for the channel. But thanks again for all the support. I will catch you guys in the next one. Take care. Bye-bye.